Welcome everyone to another financial analysis video with myself, Moeed Amin, and my colleague, Ted Wayman. We're going to start the year with a company that a lot of people have heard of. It's been in the news recently, as always, quite frankly, and that's Robinhood, right? So for any of you that are not familiar with Robinhood, essentially they are an online brokerage firm. And they pioneered the commission-free trade of stocks, exchange-traded funds or ETFs, and cryptocurrencies. So you're probably thinking, well, if they are commission-free, how do they make money? Well, they make money through a few areas. So payment for order flows. Now, we're not going to get into that. That's something for you to look into. Suffice to say, it's something that is not allowed in countries like Canada and the UK, and US and Europe are contemplating and looking into this a bit more. So definitely have a look into that. They also make money from premium membership subscription fees, stock loans. They even charge interest on uninvested cash that you might have in your account. So we'll cover those later on in the financial analysis. So stick around for that. Ted, was this a recommendation from a viewer of ours?
It certainly was, Moeed. So this was William Baker, who asked us to look at Robinhood Markets as well as Genworth Financial. So here is William, and just a reminder, if you have a company that you'd like us to have a look at, then please do drop us a line. We do get a lot of requests, so I apologize to all of you who sort of sitting there going, well, I've asked for it and you haven't done it. And also do give us a little bit of background as to why you're interested in this one. Are you an investor? Are you a supplier? Are you working for them? Are you thinking about working for them? Do you want to be selling to them? Do you want to be supplying to them? So anyway, you give me a little bit of backstory, will put you further up the priority list, so to speak.
Yeah, and we'll certainly talk more about that perspective during these sessions, because we try to cover both. But if you're particularly interested in one, then do let us know. So great point there. So what we'll do is we'll look at the finances and stick around, because the purpose for these videos, look, we get people that say, well, you didn't think about the future and you didn't think about their contracts and the potential of the business. And that's true. That's part of the investment thesis for sure. But that is not what we're here to do. That's not what this show is about. These videos are about helping you become really, really financially savvy and being able to understand, translate, and draw inferences from the fundamental financial analysis coming from their financial statements. So it's backward looking, it's kind of present looking, right, at best. That is the purpose for this, because we want you to become very financially aware and educated. And this is a skill that is still lacking, so much so, especially in the retail investment community. So we're here to elevate that skill for you. What we'll also do is stick around, because we're going to talk about the stock price. Again, we're not going to be looking at the future potential and what's baked into that price. We're going to be looking at it based upon the fundamental financial analysis. However, it's worth noting, their stock has taken a nosedive since August 2021. So we're going to look and see if there's anything in the financials that kind of gives us a hint about why that might be happening. So over to you, Ted. Let's share with everyone what we found and help them understand this business and any other businesses similar to them.
Absolutely, Moeed. And just a final reminder to our viewers, please do remember to like, share and subscribe to the channel, and then you will receive notifications of any future videos. Okay, so let's jump straight in, and we are going to be looking at the well, the financials we're going to be looking at are in the prospectus. So this is just ahead of their shareholding, so ahead of their listing. So what we're not going to be doing is looking at kind of, why, the numbers that sit behind why the share price has moved as it has. But what we are going to be looking at is the numbers which were there as it came to market. We're going to have to wait, I think, for a little while before we get their year-end annual report and accounts. So here we see the revenue. So we're going to be looking at the kind of the right-hand column. So here we go. So this is 2021. You've got the 9 months. They've also given you a kind of a 3-month trading over here, which we're kind of not going to worry about too much. So if you want to kind of get an idea of how they're going to do for the full year, then you just take the 2021 column, that right-hand column, divide it by 3, multiply it by 4, and that's your kind of back of an envelope rough approximation. Now, Moeed was talking about the sources of revenue. What you'll notice is the biggest source of revenue is transaction-based revenues. Now, these guys are commission-free. Many of you will be familiar as you pass through an airport and you look at the kind of the travel exchange, and they say we are commission-free, and you think, wow, that's great, commission-free. That's got to be a bargain. It isn't a bargain, because you need to look at the spread. So a really good exercise is, if you are passing through an airport and you've got a little bit of time, go to the commission desk, go to the foreign exchange desk, and just start with $100, for example, and then buy the first currency you see, and then sell it back to them. Buy the next currency, sell it back to them. Buy the next currency, sell it back to them. Look at their buy and their sell prices, and see after about 10 transaction, you'll be left with about $5. And the reason is that they take a very, very big spread. Now, I don't know what spreads Robinhood are working at, but they will be working at a spread. So the price that they sell you a stock and the price they buy it back from you will be a difference. It's usually a fairly small difference, but that difference, if it's multiplied by multiple users, lots of traders, this will add up into significant revenue. So you want to think about Robinhood a little bit like what we call the kind of the picks and shovels investment. So if you think about this as the analogy back to the gold rush, people rushing off to sort of Western America to go and find gold. The people who made money were the people providing the picks and the shovels to the people looking for gold. So if you're a Robinhood user, and you're out there and you're trading and you've got all your trading strategies, you may be making money. Fantastic if you are. You may be losing money, and most people in a trading environment, certainly non-professional investors, about 80%, I think it is, actually lose money on their trades. The guys who are making money are people like Robinhood, because every time you trade, they're making that little bit of margin. And if you want a little bit more information on that, you should be watching Wolf of Wall Street. Explains it very well when he first joins, when our friend Belmont first joins his brokerage. Okay, so there you go. So we are dealing, if you can see here, we are dealing in thousands of dollars. There it is, thousands of dollars. So their revenue is about 1,000 million, so about just shy of $1.5 billion in revenues. The cost of those revenues, this is the operating cost. They're not selling anything, they're selling a service, so there's no cost of sales as such, is 2.6 million. So we can see that they are running at a fairly significant loss. Now, we don't worry too much about this. So we've got some brokerage and transaction. This is their costs. And you could almost argue that that's their kind of cost of sales. Technology and operations will be the platform. So this is the kind of the costs of investing in the IT. And, theoretically, the more people who come onto Robinhood, that should stay reasonably constant and should operate as a fixed cost. They've then got some marketing costs and then all of these back end costs. So the way to think about this bit here is this is very much a kind of a fixed cost volume play. So Robinhood is at a certain level. Their aim is to get to 10 times that level or 100 times that level. Theoretically, you can then multiply this figure here. Sorry, I was meant to be pointing at that 1.5. That 1.4. You should be able to multiply that by 10 and keep these costs all fairly constant, and suddenly this becomes a very profitable business. So this company, Robinhood, is very much based on a valuation of people trading. Now, it's benefited from the pandemic, lots of people stuck at home, nothing else to do, and then suddenly through quantitative easing and the kind of the money printing going on, lots of people were given certainly in the States there was kind of $1,900 just credited into people's accounts. There's lots of extra money. That money's got to go somewhere, and people are using that to trade. Okay, and that's where Robinhood has really benefited from all the kind of the GameStop and all that stuff that we've been reading about in the papers. So the question is, can they maintain that? Can they become a kind of a significant player, and can they keep on growing their business? There are lots of platforms who offer the same, but these guys, it's their commission free, which is appealing, but doesn't make it free. Okay, it's not free, and the question is, how expensive is their spread? That's something which the users need to understand. Okay, so there is the income statement. Now, the other thing to notice on the income statement, they have a big loss here, $2 billion. Now, this is the change in the fair value of convertible notes and warrant liability. Now, I'm not exactly sure exactly what that relates to, but it looks to me, and we'll kind of try and show you a little bit later on, but it looks to me like that they have a, effectively this is a debt. They owe X, and we'll look at what X is in a minute when we look at the balance sheet. And then it's a convertible, which means that the people who are owed the money have the option to convert it into equity. And on conversion into equity, it costs the company an extra $2 billion. Okay, now I may be slightly wrong in that, and it doesn't matter too much, because the key thing to remember is that's a one-off. Okay, that didn't happen last year, and it isn't going to happen next year. That was a cost of the flotation, an additional cost of the flotation. So we can really kind of eliminate that from our future views. What we're really looking at is this this sales figure. Is it going to go up? How much is it going to go up? And compare it to that cost figure. And that's probably what's going to be driving the price, is Robinhood going to the market and say we've got X number of users or X number of trades going through. And if that's meeting expectations or exceeding expectations, it's going to put upward pressure on the price. And if it's not, then it's going to put downward pressure on the price. But these guys are a volume game. They need to get bigger. Okay, so there is our income statement. Let's go and have a look at their balance sheet. Now, remember, these guys are not a traditional company. So when we look at the balance sheet, they do split it between current and non-current assets. So here we go. We are looking at the right-hand column again. Remember, quite interesting on their balance sheet. So here are the current assets. So there's lots and lots of current assets, lots of cash. And cash, which is kind of their cash, and also cash which is held for their clients, which is kind of segregated under federal and other regulations. So in effect, if the company goes bust and you have cash held with Robinhood, you're going to get that cash back. It's your cash held with Robinhood. It's not Robinhood's cash, if that makes sense. So they can't use your cash to pay the salaries of the CEO, etc., etc. They've got some receivables in here. And other bits and pieces that you might expect, deposits with clearing organizations, etc., etc. Okay, so that's all looking fairly okay. The non-current assets, these are the things we need to run the business, relatively small. What you'll notice is that that most of it is this property, plant, and equipment. So this is their software, but again, they don't have a lot of that, because they'll rent their offices, for example. They've got some tables and chairs, computers, etc., etc. Also, just note they do have this goodwill. Okay, and so goodwill suggests that they have been buying other companies. Okay, again, in the whole scheme of things, it's not massive, but they'll have been buying, maybe small amounts of other businesses to add into their pile. Further down, we've got accounts payable. So these are accounts payable and payable to users. So this 6 billion here is kind of almost a kind of a match to this number up here. So this is kind of that they're getting money coming in and money going out, and that's through the trades. And their total liabilities, there's a little bit of a debt as well. So you can see the securities loaned down here. Much more interesting, though, is to look at the bottom part of the balance sheet. So if we just scroll down a little bit down here, so here I'll highlight it. This is the mezzanine equity. So this will be the convertible loan notes. Okay, so you can see it says convertible here, and effectively that has been converted and is now sitting down here. So in the first 6 months, it was basically they've converted it into equity, and that will form part of this kind of this IPO fundraising. And I think that's where the company makes the loss. Because they have to give away more equity than it was held in the books at initially. So there's our balance sheet. So balance sheet, it's looking, it's positive. It's 7 billion in the black, which is good. Here's their cash flow. Quite interesting. They got negative cash flow Again, this, you have to be careful about cash flow, because Robinhood is kind of closer almost to a financial institution than a normal institution, and therefore they use cash to make cash. So a little bit of a negative cash flow isn't a major issue. So that's this number here. There's the negative cash flow, positive in the previous 9 months, or the comparative 9 months, should I say. There's their business acquisition arising, giving rise to that that goodwill. So a little bit of investing going on, but there's not a lot of investing because they've got the IT systems, you know, and if they're going to do any more, then they're going to be buying property, and you can see it's sort of software and equipment mainly down here. And then here is the initial public offering. So here is the money they've raised from the issue of shares, and here you can see the proceeds from the issue of convertible notes, and I think that there's a sort of a, you know, somewhere between that 3.6 billion and the 2 billion, that's kind of where that loss effectively happens, so that the company is effectively taking the cost of paying the convertible equity holders, and that's really what's going on there. This is just kind of refinancing, so we don't have to worry about those. That's kind of matching each other. And here we can see that they were raising some additional funds pre-IPO. So, you know, the answer to this is that, you know, they floated, you know, they raised a considerable amount of cash. They've now got, you know, they are sitting on quite a lot of cash. We just go back to the balance sheet, and we can see that again in terms of their cash. So in effect, this top line, this is their cash, not your cash, if that makes sense. So it's not the user's cash. The cash sitting in the trading accounts is here. That doesn't belong to Robinhood, but Robinhood have now they've gone from 1.4 to 6 billion in cash. And their aim now is to see if they can use that cash in order to, you know, expand the business. Quite interesting that marketing looks relatively low. You know, are they really kind of, you know, getting out there and advertising and marketing to bring in their new, you know, new users effectively? Now that's effectively the kind of, you know, those are the key numbers that we're going to pull up from the excuse me, from the accounts. We can go back and have a look at their share price. So here is the share price. As Moeed said, it kind of took a little bit of spike, and then it's had you know, pretty significant downward pressure. Not a lot that, you know, we've been backward looking here, so there's nothing in the numbers that's going to tell us, you know, why it's been going down. It's got a market cap of 13.2 billion. You know, that's, you know, there's no PE ratio because there's no earnings, although you know, without that loss on the convertible, they are pretty close to break even. But even so, 13 billion, you know, interesting to see 13 billion on a balance sheet of 7 billion, you know, they're twice book value. That's, you know, we've seen companies which are significantly more, you know, more valued than that, if that makes sense. So quite interested as to the market's view of Robinhood and why the sort of the general sentiment seems to be, we don't like this company, which is what's coming through from that. I don't sit close enough to the kind of, you know, the day-to-day markets in order to kind of be able to give a view on that. And if any of our viewers does have a view as to why Robinhood, why the market doesn't like Robinhood, then do please share your comments with us in the chat. So there we go, Moeed. You know, it's am I investor? Probably not. I don't really understand the business. I understand the business. I don't understand the market. I don't know how competitive it is. I kind of feel, you know, Robinhood obviously, you know, thrived on the back of, you know, people wanting to trade. And my guess would be, looking at the share prices, that, you know, as we become post-pandemic, as we return to normal, people are back at work, they're no longer sitting at home, they don't have extra cash just given to them by their governments, which they can just, you know, chuck in the markets and have a go. And obviously markets are going to see quite a lot of headwinds. You know, we've got inflation leads to rising interest rates means that a lot of the kind of the meme stocks and the jam tomorrow stocks are going to start to suffer, and maybe the traders are going to realize that actually, you know, I've either lost all my money or I'm not going to make any more. You know, this is, you know, Robinhood, I think, is very much focused at the retail investors rather than the kind of the professional trading desks, so to speak.
Yeah, totally fair. And we're seeing that already with some of this technology companies, particularly the small cap technology businesses in the US and around the world. So yeah, very interesting analysis there. And thank you for that. And as we always say, look, if you have a company that you would love for us to help you analyze, whether you are thinking about investing in them or whether you're thinking about doing business with them or you want to get hired by them or work for them, do leave a note in the comment section and let us know about the company. And as Ted said, give us a little bit of a context as to why you're interested in this business. And really important, if you are a subscriber, you will save a lot of time and be informed of when we publish your video for you. So do let us know and leave a note in the comment section. And as always, like, share, subscribe. So till the next video, thank you very much, Ted. This was really informative. We'll see you all in the next video.
Good to see you, Moeed.